This is a Stock Trading Reality Podcast, episode 160.
I mean, like, I would have rather have got out for that quick $50 in like less than like a minute versus like having that bounce and having the opportunity to take a profit and then having it go against me again.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He could eat hummus for days, Clay Trader.
And there are all kinds of great hummus. They come in a variety of flavors. Right now I'm on a big roasted garlic and taco flavor. But, I mean, there's a lot of them out there. The original, though, is fantastic. Now, you got to be a little careful over what you are dipping into the hummus. I like to do carrots. I like to do just pretty much any sort of vegetable. And hummus is good for you. However, you know, it's one of those opportunities in a diet where things can potentially sneak in the back door, where if you're like, oh, yeah, I love to dip Doritos in hummus, or I like to dip Cheesy Puffs in hummus. Well, then you can't sit there and say, oh, yeah, I eat hummus and it's good for you. That's true, but, you know, the context is you're also introducing all those other things. So just be aware of that. Hummus is great, and it's higher in the healthy fats, so it means the calories are up there. But overall, if you've never tried hummus, at least try it. And try it a couple times, because at first I was not a fan, but then I decided to give it another try, and it was tasty, and yeah, I love it. I really could eat it for days on days. We'll move on from that, though. But yeah, get out there, try some hummus. Our guest today is AlphaThor. His real name is Mark, but if you hang out really any time at all in the chat rooms, I'm sure you've seen AlphaThor at one point or another. He has been on the show before, back in episode 96, and I wanted to catch up with him just to see what's been going on. And we have an awesome conversation about his strategy. We go into depth about it, and him and I trade somewhat similarly. He's actually doing it with options, though. So, and going into this, I had some impressions and assumptions that I had made just by reading what he's been saying in the chat room. So for me, it was a way to just ask him more in-depth questions to try to understand better. And that's why I really love these is, you know, they really aren't staged. I want to keep this where I know as little as possible. That way, it literally can be like you're a fly on the wall, just listening to Mark and I sit there and talk over a cup of coffee or whatever. And that's what we do. I ask him a lot of questions. At first, I'm unclear on a few things, but then we hit our stride, and you know, he explains the strategy. And I should note that the strategy is doing very, very well for him. It's got a great win rate. I don't want to spoil any of that other than what, you know, I just kind of alluded to there. But a lot of good stuff here, and you know, a lot can be learned about somebody that, you know, shows up not knowing much to now somebody that's talking criteria and talking all these different, you know, attributes of a strategy. That's why when people say, oh yeah, the market's all about buy low, sell high. Okay, yeah, but there is more to it, and the quote unquote more to it, you're going to get a good look into that for, you know, what does need to go into a particular strategy. Not only that Alpha is using, but just, you know, strategies in general. There is more than buy low, sell high. Ches had some issues with his mic, or I'm not quite sure what was going on, but Ches had technical difficulties, so this one is just going to be myself and Mark, so let's get to it. Alpha, welcome back to the show.
Hey, thanks, Clay. Thanks for having me back.
Now, do you remember what I called you during the first one? I feel like, did I address you Mark, your real name, or was it AlphaThor the whole time? I feel like I just called you Alpha. Do you remember at all?
You can just call me Alpha or Mark. It's up to you. It doesn't matter.
But
same thing. But
in my mind, I always just picture you as Alpha, even though your name is technically AlphaThor. So, but I'm just going to call you Alpha. And for you listeners out there, his name is Mark. But you know, some people, you just get to know them by their alias. You get to know them even though it's not their real name. So yeah, Alpha is not his real name, but that's just what makes me feel most comfortable. And I did my homework, Alpha. You were last on episode 96. So you were on a little over a year ago, and what I want to do is catch up kind of what's happened over that past year. But before we get to that, in a nutshell, I guess kind of just walk us through where you were during that first podcast, and I realized it was over a year ago, so you may not know exactly, but I guess kind of in a nutshell, what got you into the markets, where did you first start to trade, and then we'll kind of pick it up from there.
Roger. Well, basically, like a recap was I started off with like penny stocks, and then I found claytrader.com, and then I decided to invest into my education, and then after that, going through all the education, I found options, which are like Clay calls them penny stocks on steroids, and then I became really interested in those, and I decided to start trading those, and what's it called, basically been doing that ever since. I've been loving it.
So, quick recap: penny stocks to not went so well to I need to get involved in my education to hey, I'm learning about this thing called options, and now you are currently doing options, right?
That's correct.
So I guess options wise, I know what you're doing right now. But I'm assuming you didn't start off doing that right away, right? I mean, when you were first getting to options trading, kind of what exactly, kind of how were you trying to use them?
Basically, I guess I was trying to, capture moves, and I always found myself trying to, try and catch tops of moves and bottoms of moves. So, I mean, it took me a while, but, I mean, I eventually found out how to use that to my advantage versus disadvantage, like I used to. Does that answer the question?
Yeah. So, I mean, you were pretty much just, I mean, were you struggling? So basically you're trying to do it from a day trading perspective.
Yeah, 100%.
And has it always been day trading perspective? Have you ever tried the advanced or the swing trading or anything like that?
I dabbled with advanced options a little bit. And then that didn't work out too well. And then I tried, I mean, the whole thing about the journey is you have to keep trying to do try and find your way, the exact style. I mean, that takes some time, but so I tried swing trading options. That didn't work out too well. Then I've always just had a passion, for day trading options, and then just recently, I used to be trading next week's expiries and day trading next week's expiries, and that wasn't working too well. Then just recently I started day trading the weeklies that are expiring this week, and that's basically did a 180 on my trading.
All right,
just because they move so much quicker.
Yeah, we'll pick up there, but I'm curious.
Yeah, sure.
You mentioned dabbling in swing trading, that didn't work out too well, and I want to kind of go down that rabbit hole a little bit because we've had lots of guests on the show where that's their bread and butter. They do options trading with the swing trading in advanced, and they're doing very well with it. But here is your case where, it didn't really go too well. So where exactly, I guess kind of walk us through that portion of the journey. I mean, were you, how long were you trying to trade it? What exactly were you trying to do? And then how long did you kind of, give that effort in? I'm not necessarily you blow up your account, but I mean, just what part of it didn't quite jive right with you?
I guess just I tried to scale into positions, and then I'd say I always just kept risk really minimal off the bat. I'd probably pick up $100 option or something, and then if it went against me a little bit, I'd pick up another one, in a sense scale in instead of just hopping in and then putting in a stop loss type thing. You know what I mean? But I was okay with the risk because they were pretty much inexpensive options that I was going a few months out for. You know what I mean? So I mean, in a sense that, I was keeping risk controlled just by the amount of money that I was spending on the options. I wasn't buying $1,000 options or things like that. But I mean, this was just this probably in September or so that I just tried doing that. Then ended up taking a couple, I guess back in the day $100 loss was a big loss for me. So I mean, I took a couple of those, and a couple of them worked out. But I decided that the swinging the options with doing that type of method wasn't really for me.
Okay, so it's not like you had any account blowups. You had a couple $100 losses, like you said, which for you it was relatively big, but you also had some workout. So it was kind of just sounds like just your wheels were spinning the mud. Is that kind of a fair summary of how that was all playing out for you?
Yeah, pretty much.
Okay, and was there a specific trade, or was there some specific event that made you just say, you know what, I got to move on? I mean, what exactly happened that made you finally just kind of decide you wanted to cut the cord in regards to, the advanced options?
These were just regular swing trading, just premium options, but the advanced options I haven't touched since probably a year ago.
Oh, okay. So I mean, this swing trading was still, you're just going long or short the premium. You weren't.
Yeah, exactly.
Okay, all right. So you weren't doing any butterflies or condors or anything like that.
No.
Okay,
No.
all right. And how long did you actually give up? I mean, when you're saying swing trading, were you looking to hold a week, a couple of days? What kind of time frames were you looking at?
Well, like I was saying, I just tried to. I mean, the amount of money that I put into it, I was basically in a sense what I was willing to risk. So I would go 4 or 5, 6 months out on these swing trades, and then it's either I'm gonna take a decent loss, I guess, on all the money I put on. Say it was a $300 position, my max position. I was willing to take that $300 loss most of the time versus give it time to, I guess, get caught up in the river and then get back to moving in my favor in a sense. But most of the time, I would never let it get to that full max realized loss. I'd usually pretty much cut losses at $100.
So, but I realize you're going super far out in the money, but how, what kind of time frame was it? Or were you just I'll just hold until I make money? Or is it I'd like to see money within X amount of time, such as within the next few days or next few weeks?
Yeah, exactly. I mean, that time I was still learning about how options work. So most of these trade, it was kind of I'll put this trade on for 5, 6 months or whatever. But if I get profitable or whatever in that time period, I'll obviously take some sort of profits. But in a sense, versus so I always thought I was thinking in that state of mind, I was thinking if I gave myself more time, I have more time to be right in a sense,
Right. No, and that makes sense. I'm just trying to figure out, because most swing traders are yeah, I'm a swing trader, but I'm a swing trader that's looking to buy and sell within a week, or I'm a swing trader that looks to buy and sell within a couple of weeks. But for you, it sounds like you were just gonna buy, give yourself plenty of time, and if some profits showed up, then you would take it. But it's not like you were expecting or looking for profits within a certain amount of time. I mean, you were just. It sounds like you're kind of just almost making it up as you went, in the sense of, I'm just going to go super far out super far out in time as far as expiration, and then we'll just see if I can get some gains. I mean, from what I'm hearing, you weren't sitting there saying, yeah, you know what, I'm a multi-week or a multi-month swing trader. You were just, I'm going to buy and let's see if I can get some gains. Is that pretty much what was going on?
Yeah, pretty much.
Okay. All right. So I guess I'm trying to think. I mean, yeah. But that's all part of the learning curve. I mean, I think if you would have probably dialed in more so what you want, a certain time frame, you might have been able to maybe put together something a little bit more structured, rather than, yeah, I just figure if I give myself enough time to be right, then we'll see if I'm right. But like you're also saying, at least if your max loss was always your position size that you felt comfortable with, and you never quite took the total max loss either. So that's good. I mean, it's not like it was a total train wreck, but it seems like maybe there's some loose ends in there when you're just buying and then hoping that you're giving yourself enough time to be right. But and that then, I mean, how long did all that last for you? Was this a couple months you tried? You said back in September, but how long did that actually go after starting in September?
Probably 2-3 months. Probably
Okay.
about maybe 12 trades or so.
All right. And that would make sense, 12 trades when you're doing the long-term time frames. Did this have anything to do with your work schedule or anything, or is this just you just wanting to try something different?
No, I've always had I've always worked it out with my current full-time job to where I could basically trade all morning long till 2:30, then go do that job, which has always been awesome, which is kind of why the benefit, I guess, of that job, just it works out really well with a trading schedule, which works really fair with that, which is awesome. So
Nice.
I've always had the opportunity to either A, day trade, or B, swing trade, but all summer long, I really didn't day trade too much.
Now, why didn't you day trade during the summer?
I don't know. I just had like this precognition or like this idea in my mind, like I guess the volume kind of like slowed up, and there wasn't going to be that many opportunities, and like I really like was struggling like trying to find my way like trading. So like I was just like kind of just like coasting, I guess in a sense, and like just taking it easy. Like if I saw like an opportunity that I wanted to do, like I would trade it, but I wasn't really like pushing like really hard to trade in that sense during the summer.
Okay, and that was, like you said, that was just all derived from the fact that you thought, all right, well, it's summer. Well, I mean, the saying, selling may go away. So you're just like, whatever, there's not going to be that much going on. So it's not like you were, not necessarily believing in yourself. You just figured that there wouldn't be that many opportunities. Is that essentially kind of what your thought process was?
Yeah, pretty much. I mean, I guess that's a preconceived notion that just volume kind of slows up.
Okay, yeah, that does make sense, and I can see why you'd be like, all right, well, I'm gonna take things easy a little bit because there's not gonna be as many opportunities. So I mean, at what time did you start to kind of get a little bit more active again? I mean, was this that September time frame, or did you start to get a little bit more active sooner than that?
Yeah, instantly in September, I was like, because the whole summer long, I was like, all right, as soon as September comes around, I'm getting back into hitting the markets like at like open, and just when the volume and all that type of stuff comes back in.
Now, did you talk with anybody in the inner circle or anything? I mean, because the summer, I mean, it was still a pretty solid summer. I mean, I guess, where did this preconceived notion come from? I mean, just that saying selling may go away, or why were you thinking that there wouldn't be so much volume over the summer?
Not sure. I mean, I guess more so is probably just like me kind of like needing like a break, I guess, from the trading. Like, I mean, at that time, like I was probably like a year and a half or so, like just going for it, and then I kind of just like needed like a time to like, I guess, like take it easy and just like recollect myself, I guess, in a sense, and try and get like a new perspective on the markets, I guess, and by like September, if that makes any sense.
No, yeah, no, that does. Sometimes you just needed a break, and sometimes that's the best medicine for anything is just stepping away for a little bit, letting your mind reset. So that makes perfect sense. Now, during this whole time, did you always knew that you wanted to come back to trading, though, right?
Oh yeah, that's no doubt about it. This is something that's been born like a passion of mine. So I just love to trade. So
my question is, during this time when you're still working and all that, were you just starting to hoard up more cash for your trading when you returned to doing it? Were you just that way you could come back with a bigger account size?
Not necessarily. I mean, like my account size always stayed around like a certain point, like, and like I never had like any massive blow ups or anything. Like since I started trading, I always knew how to like control risk, and I was never like letting losses like get too out of control. Like I think to this day, like my biggest loss ever is like $250, which is like nothing, I guess, in the scheme of things. But so like in that sense, like I've like I mean, like even like this year, I guess coming around, like I've all my losses in the past, like I've been able to dig myself out of like that small hole that I had from like 2+ years of trading. You know what I mean?
Right. So, but I guess so. You took the time off. You knew you wanted to come back. Did you want to come back with a bigger account size, or did you always just plan on I want to come back with the same account size? Because I mean, in my mind, the way I would think, if I put myself in your shoes, it's okay, I'm going to take a break from the markets, but I know I want to come back to the markets, but I'm still working. So maybe I can set aside some more cash over these next few months so that when I do come back to trading, I'll have that much bigger of an account. But it sounds like you didn't do any of that. You were fine with the account size you knew that you had before you even took the break.
Yeah, exactly. I mean, with the options, like you don't need like a massive account size. So my account size is where I think I need it to like do as much trading as I want to, and during the course of like an 8-hour day, you know.
Right. Okay, no, that makes sense. I wasn't sure because sometimes people, I think I might need a little bit of bigger of an account size to do this, that, or the other. But you're totally fine with it, and that's okay. Well, that makes sense now. If you were already fine with it before you even began your break in, just wanting to kind of your mental focused relaxation period, we'll call it, so that you could come back. So you already came back, like you said, in September. You tried the swing trading, and I guess we've already talked about, but where did that idea even come from? Because you're taking a break, you just want to step away. Was that, I mean, where did that idea, where did that premonition even come from, that when you came back, you're actually going to, start something completely new? Was that because what you were doing previously wasn't quite working, or what was the logic behind that?
Yeah, like what I was doing previously wasn't really working, and like I was seeing like people in the chat room that were being really successful with like swinging options that way. So I thought maybe I should give it a go. And yeah, I mean, basically, so I decided to give it a shot. Then I realized, like, obviously sooner than later, that it wasn't really exactly catering to my like exact style of, I mean, like, I guess habits and stuff that I have.
Right. Yeah, no, I definitely, you seem like somebody that's more so wired like me, where you're just like, all right, let's go, come on. I mean, I don't feel like waiting for, days, let alone weeks, let alone potentially multiple weeks. So you decide you want to stop with the swing trading. Where exactly, and I know you started to talk on this earlier before we took a pause there, but where did you kind of go from there? As you made the decision, all right, this swing trading stuff, it's just not quite for me. And then what happened, from that point?
I guess, like, I mean, this past couple months kind of seems like a blur before, like, before just recently. But like, I guess, I mean, I was just still day trading options, but I guess that I was kind of like, I guess, in a lull type phase, like in between then, like I was like making some money, I was losing a little bit, I was making some, I mean, that seems like, I guess, the summary of my first 2 years of trading, I guess, I mean, like, but like you were saying, like, you want to, like, you have the same like type of, I guess, like ideas, like you just want it to get in and let it do something for you and then just hop out. So like I've always been like aggressive with, like, I guess taking profits and stuff. That's just like been like the way like my brain's wired, I guess you could say. So I mean, like, I was never having like huge wins or whatever, but I was, in a sense, like just like past couple months. Yeah.
So what exactly, I mean, you were day trading. So I guess the better question for me to ask is, what were you doing then, where you were just still kind of doing whatever, compared to what you're doing now? Because I know what you're doing now, you're doing well with, you're having some success with. So what's the difference all of a sudden? Because technically speaking, you've quote unquote day traded options before with not much success, but you're still day trading options right now with success. So what's the difference here? What exactly are you doing that's making things different, even though it's the same in the sense of day trading?
Right. I mean, like, I mean, it's kind of hard, I guess, to say like what the exact difference would be. Like, I guess I was like previously, like, I would, I guess, hop in and like, or like just like see like a setup that I wanted to play, and then like instantly like decide like, okay, if it does this, like, I mean, like, instead of like letting the market, I guess, like dictate what it wants to do, and then instead of forcing my ideas on what it should do, I guess was kind of like a change in a sense. Does that make any sense?
Kind of. I guess.
Like,
I mean, were you changing your entry criteria? Were you changing your trade management criteria? I mean, something had to have changed. I mean, I get it what you're saying in the sense of the mental attitude of, you got to just take what the market gives you. I can't make the market act a certain way just because I think something's going to act a certain way. But I mean, I'm just talking about more from a logistics standpoint. What exactly, I mean, were you using different setups? I mean, what exactly had changed?
Well, I mean, just as of recently, my entry criteria definitely changed. So like I look for like a strict like set of parameters before I'll even like get into a trade now.
Okay, so that's more what is this? What is this strict set of parameters that you are now looking for? Compared to what it used to be.
Right. Well, I mean, like, I guess previously, like, I would wait for, I guess, too much confirmation, I guess you could say, and then like in the day trading versus like anticipating the moves, like as like what I'm doing now, like, so like previously I'll be like, okay, like a stock's pulling back into like a support, and then I'll wait for it to start bouncing from that support before I would hop in. But now it's kind of like, say, like now I'm looking for like, I guess, rubber bands, and then like into like those support and resistance areas, and like I also use, sorry my mic, use like stochastic RSI to like be at like pin like 100 or 0, which DT in the chat room turned me on to, and just like between like those two and just using rubber bands and the scalping technique, it's been working really well.
Okay, so then, all right, now we're making some progress here. I feel like, so you're looking for rubber bands, overextended, and it's, from what I've taken away is, like you said, you were first, well, okay, I'll let the price get down there, I'll see if it can go sideways, and then I'll see if it starts to go up, and that's when you used to make moves, right?
Mm-hmm.
But now it sounds like you locate levels of support beforehand, and if you see certain price action, such as a rubber band, then you begin to put your order in before the price even gets down to certain levels. Is that accurate?
Right, exactly.
So you are definitely being a lot more proactive. Basically, you're not looking for any confirmation at all. And to your credit, earlier you said you're doing more anticipating, which is something we talk about a lot in the live webinars and stuff, how you can anticipate certain trading dynamics. And for you listeners out there, by no means are we saying this is how you have to trade. Everybody, to steal Mark's wording, or Alpha, hey, I just called you by your name. To steal Alpha's wording, everybody's wired differently. So just because this is working for him, it may not necessarily work for you, but you are just being a lot more. You are saying, you know what, I think this is going to happen. I'm anticipating, and I believe in that so much that I'm going to put in my order right now before anything has actually even happened in regards to his overall philosophy. But by doing that, and I'll let you touch on this too, I'm assuming you get yourself some pretty nice little entry points, because for the most part, I'm assuming you're buying on the bid.
Yeah, that's one of the main criteria is I always pretty much get filled on the bid, and I'm trading options like Amazon and Tesla and Netflix with like a decent spread. So like even if you get filled on the bid, it's like almost as soon as you get filled on the bid, you're instantly in the green in a sense.
Yeah, I get it for sure. And if you've watched any of my live trade videos, then Mark is essentially kind of doing what I do in a sense, but with options and stuff. But you made this decent size spread. So define decent size. Do you have some sort of criteria for a spread that you're looking for?
Usually at least probably at least 20 cents, or with options that's like $20 as like a minimum, I would say.
Okay, so you're not doing this with SPY or Apple or anything like that, where the spreads are maybe 2 or 3 cents at best.
Right. I think this strategy that I've been doing works better if there's a spread with the options.
Oh yeah, no, you for sure need a spread, because, like I said, I'm doing it with stocks, and if it's a mud stock, then and the price has to work so hard to make a 10-cent move, then yeah, it's just not going to work for what we're trying to do. So yeah, no, you're absolutely right. You definitely need a spread. 20 cents, you may think, oh, what, 20-cent spread? That's crazy. Well, remember, it is options, so it's more difficult than that. But he's also, that's a big part of the strategy, is he wants those spreads to go in his favor. So you get filled. After you get filled, what is your what are your logistics from that point? Are you immediately putting in a sell order? Are you waiting to see things unfold? But how do you manage the trade? Because we've talked about how you identify, you're anticipating, but now let's say you've been filled on the bid. What are you doing from that point of the trade?
So say I get filled on the bid, I'm already really liking. So first of all, I'll say I'm watching say Amazon, it's meeting all my entry criteria, and the bid and the ask on the. Sorry, that mic. So say Amazon's rubber banding, it's meeting all my entry criteria, and then the spread on the options say $5.50 by $6, and then it already met all my entry criteria. My first order won't go down to $5. So I'm already interested in getting into this position, but I'm going to look for another, I guess, $50 discount before I even get filled on my first order with a fishing order, which is something that you use as well.
So basically, you are looking for something that's already beat up, but you're adding in another layer of getting quote unquote beat up before you would ever be. So you want something that's not only beat up, but you want something that's beat up. Is that essentially what you're saying here?
Right, exactly.
And for that, it's, in this example you're using, it'd be another $50 for the move downwards. So listeners out there, pretty much what Alpha's getting at is something that he doesn't want just, it's overextended. He wants that thing really, really overextended. And that way he can, leverage the probabilities that much higher in his favor. So yeah, that good, important distinction there. So, you were saying if it was at 550 on the bid, you want to put in your first order until 5. Now first order. So it sounds like something else you're looking to do is, build up a position. So how big are you looking to build up a position?
Lately, it's been a maximum of like 3, I guess. Like, so say I've been keeping this strategy like not too crazy. So I've basically been starting with like 1 or 2 contracts, with most of the time only 1 contract. So like say I'll buy like one $500 contract, and then say Amazon, like, I guess keeps pulling back or whatever, like into like another layer of support, like, and then like, so I got filled at $5, and now the spread is like 430 or whatever, or 450. I'll place like another order at like I guess 420, and then I'll get filled on that. And almost like 100% of the time, by the time I rarely ever get my third average down in a sense, but usually at least by the third, which is like almost never happens, I had an opportunity to get out for a profit.
Right, and that makes sense. Now, you made a comment about essentially it depends on whether you're doing 2 contracts or 1 contract or what have you. So define it depends. What exactly would dictate whether or not you're starting off with 1 contract or 2 contract or what have you?
Well, I've been using I use Interactive Brokers, and they have this awesome tool which I've been loving that Hooch turned me on to, which was Book Trader, which is where you just like click and you have it buy order, and then you click on the other side of the bid ask chain. I guess it's like a ladder. I guess maybe somebody might know it as a ladder, I guess, like a price ladder. But so like what basically would dictate, like, as I always try and get filled on with like 1 order, but sometimes I accidentally catch myself double clicking. So like say like if it's pulling, I'm like, all right, I'm interested, and then like I get filled on my like my bid or whatever, and then like I'll accidentally like double click to like remove that order in a sense, and then it'll like fill me for 2. I already wanted to get in, but like, so I placed the order, and then it moved, and then I accidentally like double clicked or.
Right. So you're just saying these are logistical errors on your part.
Right, which all end up usually working out great in my favor. So like I'm pretty confident that I could start with 2 contracts, which I think will work better in the long run. Okay. But I still just want to take it nice and slow.
Right. No, I would agree with taking it nice and slow. I guess I took it as, it sounded like sometimes you would start with position building with 1 contract. Other times you would start with 2. So my question was just, well, what is determining whether or not you're starting with 1 or 2? But from my understanding now, I just mean that sometimes because of logistical error, I'll start off with 2. Is that accurate then?
Yeah, pretty much.
Well, what's the not pretty much?
No, that's basically what happens is like I'll just double click and then I'll just instantly get filled for 2.
Okay, so it's not like you're looking at one setup and saying, oh yeah, for this setup I'm definitely starting with 2, versus another setup where you're saying, oh yeah, for this one I would definitely only start with 1. That doesn't really exist then?
Right.
Okay, all right. So I guess you know that all your criteria is there. You enter in the entry point so that it goes even that much further down. So after you do get filled, let's say you want to do 2 contracts and there's no logistical error, so you get your 1 contract. Are you automatically putting in a sell order right away? Are you waiting to see if it goes down and allows you to get another contract? What exactly, walk us through the trade after you get that first fill on a contract.
So, say if I get a first fill on a contract, and then
let's go with that. Earlier you said Amazon was at let's say 550 bid, but so that means your first contract would be down at 5. So you get that first contract at $5. You can use that example. What would you be doing from that point in terms of managing it?
So say, all right, so you already have a rubber band. It already got that much more overextended, and then you got filled at and then it kept tanking through that. It just blew through that support level, and now it's approaching another support level.
Well, let's just
so
we'll take that. We'll play the what ifs, but right now you get filled at 5. What are you doing at that point? Are you putting in a sell order or no?
No, not immediately.
Okay.
I mean, I'll be watching the ask price on the option to gauge like if it's a time to put my sell order in or not.
Okay, so
I mean,
what has to happen in
Sorry.
order for you to put in that sell order for that one contract?
I mean, generally I'm pretty quick with it, so I mean, like it's either gonna go against me and then I'll get my second contract, which I would like, or it's just gonna give me a quick move, a bounce in my direction, and then I'm planning on, I guess, slick willieing the ask and then hopping out in a sense. But with like Amazon, that could be like a $50 spread, that I just got filled on.
Right. So you said that as soon as you get filled, you do not put in a sell order. You said you want to watch it a little bit more. What exactly are you watching for that's going to automatically say, all right, I've seen what I'm looking for, I'm putting in the sell order?
Well, I'm just trying to find out if the probabilities are in my favor to get filled on the second contract or not, in a sense. So like if it's going against me, and then I'll leave a buy order, because I can't have two orders on. I can't have a sell order and a buy order. So like it's either like I have to either have a sell order or a buy order out to get a second contract, or if it's bouncing in my favor already, I have to have a sell order out.
That's interesting. So you cannot put a sell order and a buy order at the same time. That doesn't seem right. Because you should be able to say, I want to sell up here if it gets to this price, but I'm also willing to buy another one if it falls down. And you can't do that?
No, imagine. I mean, you got to think about it. It's a cash account. So what if I guess I was just trying to think like, so like, I mean, I can't have a short contract, I guess I could say, in the cash account.
I see.
Which I guess
I think I see. I don't know. Maybe I'm just overthinking this, but anyways, regardless. So if it does start to head in, that makes sense. That does make sense though. So if it's starting to head more so in your direction, you're like, well, it's looking like I'm not even going to get that second contract, so I might as well just try to get out now for this one contract. And therefore, you then use your kind of one allotted thing within your broker to sell out. Is that pretty much what's going on then?
Well, I mean, so like, say if I got filled at $5 and then it starts bouncing in my favor, the ask on that's gonna be at least, I guess, $5.50. So I'll place I'll place an order in front of everybody else trying to sell, and then if somebody, I guess, wants to if my old self waiting for that confirmation, seeing it bounce, and they hit a market buy, it's instantly gonna fill me on the ask,
Right. I guess I'm still just confused on what is automatically making you decide, all right, that bid-ask spread is now good enough for me to want to put in my order and get out. I mean, are you watching the chart for any of this? Are you just looking at the level twos? What exactly is making you say that I want to get out now? That's just kind of where I'm hung up and not quite sure.
Just because obviously I'm trading against the trend, so I always try and stay aggressive, and that I'm like we were saying, like, instead of like waiting. So say if I wait for that bounce and then don't take profits, I guess, and then it starts going against me again, like, I mean, like, I would have rather have got out for that quick $50 in like less than like a minute, versus like having that bounce and having the opportunity to take a profit and then having it go against me again,
Okay, I think so. I mean, I get what you're saying. I get what you're saying in the spirit of things. I'm just trying to think or figure out what exactly, because, I mean, right off the get-go, like for me when I do it, as soon as I get filled, I'm putting my first sell order in right away. Mm-hmm. But it's you said that you watch it for a little bit. So I'm just trying to figure out what your criteria is from you deciding that, all right, I'm no longer going to watch. I'm going to take action now and put my sell order out there. I think I get what you're saying though now, but
well, the sell order instantly goes out as soon as like starts bouncing in my favor. So like, say if it's rubber banding and then starts to bounce in my favor. All right,
let me ask this then. In your favor, what do you consider in your favor? Are you looking for a certain amount that you can all of a sudden get, or I mean, how do you define because obviously, just for example, if I get in at $30 and it goes up to $30.02, okay, yeah, that's in my favor, but that's 2 cents. So that's Yeah, it's in my favor technically speaking, but it's not really mathematically speaking. So define in your favor. I mean, what sort of amount are you looking for?
It's not really a specific amount. I'm basically just watching, I guess, the bid-ask prices on these options to like. So say if I got filled at $5 and now the bid's up to $5.20 and the ask is up to $5.60, I would consider that in my favor.
Okay, so you're looking. So the first step of being in your favor is that the new bid starts to go above your entry point, right?
Correct.
Okay, but you're not going to hit the bid though. So you're not going to hit the bid at 520.
No, definitely not.
You would put in. I mean, what sort of order would you put in then?
I would so say the ask was at $5.60, or I got filled at $5. The ask is at $5.60. I'll place the sell order at $5.55 or just under that. The ask. Okay,
so you're literally you're trying to do slick Willy through and through. You're not trying to play a midpoint game or anything like that. All right, no.
Right.
Now, all right, here we go. Now that's making sense. So you're looking in your favor. You're defining as a bid that's higher than what you got in, and even after that, though, you're not going to hit the bid. You're still going to try to play the in between game and pretty much. All right, so no, that makes good sense. That makes good sense in terms of what is all of a sudden changing. Your viewpoint from I'm just going to watch to I'm going to take action. You want to see that bid start to creep up. Like I said, not a set amount, but I mean, is it usually? Let me say this: what happens if the bid was at 505? Are you doing anything then?
Well, I mean, if the ask is at 555, then yeah, I mean, I'll still have it as a slick Willy. But say if it bounces in my favor and then I can see it starting to roll back over. Like, I'll start working my sell order down from 555 to 550, and I'll just keep clicking until eventually somebody will fill me in the midpoint and say instead of that quick $50, like I'll just take the quick $20 or whatever,
Okay, all right, no, that's yeah, there we go. Now I'm getting it. So how long before you start to work your order down? Are you? It sounds like you're strictly watching the chart then for that.
I feel like more often or not, I'm more watching the book trader like bid ask prices. I'm just like I can kind of I guess from watching the book trader I'm kind of I guess getting comfortable with like I can tell what the chart's doing just by watching the bid ask price of like the option.
Right. In a sense. So I mean, do you have I realize you don't have probably any, like you don't pull out a stopwatch and be like, all right, I'm going to give this 5 seconds, but I mean ballpark, how long are you willing to give an order to get filled before you start to work it down?
Probably like a minute.
Okay, all right, yeah. That's actually, if as a listener thinking a minute, remember, this is short-term scalping, so a minute is actually a pretty good chunk amount of time. And when you are working your order down, I mean, do you prefer to do it in certain increments? Like, are you doing 5 cents or are you doing 10 cents, or is that just kind of depending on what you're seeing on the book trader?
Yeah, just depending on what I'm seeing on the book trader.
Okay, all right. Perfect. That makes good sense then about what you're looking to see, how you're looking to try to get out. And so now let's go back to the what if game. It goes down and it fills you at $5, but in this case, the bid does not go up at all. In fact, the bid keeps on dropping. How low below, that first entry point is usually your next contract. I know you mentioned earlier that you would, kind of use that via the chart to try to find where that next kind of area of support or resistances, whatever side of things you're looking at. But I guess walk us through that what if portion now. You get filled at 5, but the price just, I mean, the bid does not go up at all. In fact, the bid keeps dropping.
So I get filled at 5, and then like Amazon, I guess, blows through the next level of support, and then I can see it. I mean, I use a 1 minute chart, mostly scalping. So like it was already attractive. It filled me on the bid, so it was that much more attractive, and now it's even pulling back more, which makes it even like 3 times as attractive. And then so I got filled at 5, and then usually, I mean, depending on like what type of day it is, like Amazon Friday, like my orders will be in like $100 increments versus like I guess today, I would say say for the example of I guess this, like say I put one at like $420. And then if it filled me on that, I guess my average price would be down to like $460 or so. And then, I mean, and usually this whole strategy is based on the premise that nothing goes exactly straight up and nothing goes exactly straight down in a sense. So like within that move, you're gonna have bounces and pullbacks, like people taking profits. So like say my average price now is 460, and then the bid ask on this option is say like 440, like it just filled me at 420, or say it's even at $4, and now the ask is at 450. But usually within that time, I would have a bounce in my favor. So like as soon as that small little bounce starts to happen, you're now looking at an ask at like 480. So like if I can sell one of those contracts at 480, that's a $20 profit on the one contract.
And then where'd your next sell try to be at? Because you'd still have one more left. So you get one at 480, then what are you looking for from that point?
So I mean, I've been kind of like working on this a little bit, but like I haven't had that much like I guess occurrences with like more than one contract. So like say like I'll sell one at like for $20, and then the next one I'll sell for $30 in a sense, or like yeah. So, I mean just like with like another $20 bill off of that next contract or so, which say it's Amazon's like still or like pulling against me. It gave me that opportunity to get out. Say even if I felt nervous or whatever, like sometimes like I kind of get nervous with like in that type of position. Like sure I won't get up to like my max like amount of contracts I want, but like it didn't do like exactly what I thought it was going to do in a sense. Like say I like anticipated it, but I was like $1 off or whatever. So like I was in the red for like a little bit longer than I was comfortable. Like I'll place that first sell order at like say my average price was like 460. I'll place that first sell order at like 465 just to get some of that risk off the table.
Right? Yeah. No, you're mitigating the risk, and that's that makes perfect sense. So how long have you actually been doing this strategy now?
Probably since the beginning or the end of January, I would say.
All right, so you're about 2 months in. And what sort of win rate are you at?
You're gonna laugh, but 100% with this strategy.
No, not laughing at all. How many trades does that have?
That's a lot. It's probably easily over 100.
Okay, all right. And I bring that up, and 100% is not hard to believe or anything, because like I said, I do the same strategy, and some of you are thinking, why is he buying more? It's going against him. Why is he buying more? You should not average down. Well, first off, it's not averaging down, but what's going on? There's two types of risk versus reward. Yeah, there's some, if I'm going to risk $10, then I want to be able to make, let's just say $30 or $40. That's one type of risk versus reward where you got to have things structured in favor. There's another type of risk versus reward where when you do lose, your losses are going to be bigger than your winners. So it's kind of flipped. And a lot of people are like, wait, well then how can the strategy work out if your losses are going to be bigger, or even in some cases much bigger than your wins? Well, you compensate and then overcompensate for that via having a super high win rate strategy. And this is, if you go back through the show notes or through we'll link a couple of these on the show notes page, but I've shown some past months, and every single day in the month is green. And then, this has been multiple months in a row, every single day is green. So yes, the strategy that I'm using, the strategy that Alpha is using, is a high win rate. But it needs to be high win rate because Alpha is going to lose. At some point, he will lose. Nothing is going to stay 100%. And when he does lose, it's going to be a big loss. It'll be a big loss. However, because he's winning so much, yeah, it'll wipe away some wins. But within the grand scheme of things, it'll compensate and it'll keep on growing. So I'm glad. I don't know if I was expecting you to say 100%, but I'm glad to hear that so far it's a super, super high win rate percentage because when you're doing what you're doing and a loss does happen, yeah, it will be bigger than any of your wins that you've had. But because it's such a high win rate, things will work themselves out over time. So good. I'm glad you didn't come back and say, oh, yeah, this works about 75% of the time. That's not going to be good enough. Yeah, so that's good. So listeners out there, remember, just keep in mind there's different types of risk versus reward. Sometimes risk versus reward is balanced properly if there's a super high win rate strategy. But the flip side of that is, yeah, maybe those losses are going to be bigger than some of the wins. But no, that was a good discussion, and that makes a whole lot more sense. Now, and you're doing all this from your phone? Because I know you mentioned that in
No.
the chat room, and I almost had a heart attack. But is that true? You're doing all this from your phone?
No, definitely not.
Oh,
I'm
okay.
sitting in
All
front
right.
of my computer.
All right. Well, then
I
what
was
were you
like-
talking
I was-
about?
I
Were you
was-
making a trade from your phone or something? What was that about? What?
Yeah, that week I was working at my day job, and I was sorry, my mic. I was training. I was like at like a training thing for for work, but like there was no point for me to really be there, so I was just like kind of just chilling, and then like I kept watching the markets on my phone because there was nothing else to do. Then I would look to apply like I guess a strategy with just like off my phone just for like quick scalps. I mean, I wasn't getting like too crazy or whatever.
Don't
but
you think
I
that's
I ended up
risky
making, like,
though
100
for
bucks.
this strategy? I could never imagine doing this strategy from a phone. I mean,
Yeah.
I don't know, man. I mean, you're still at 100% win rate, but I don't know. I mean, I just feel like let me put it this way: I am very relieved to hear that you are not doing all of these from your phone, because to me that sounds like it's got potential train wreck written all over it. With some like, I need to hit that button with my finger. Oh no. And then all of a sudden things are nasty. But it sounds like that was just an exception to the rule because you had some job stuff going on. Is that? But most times you're at the computer.
Right.
All right.
I mean, I wasn't going crazy. I was just looking. I like if I saw an opportunity and I got filled on the bid, I would just get filled on the bid and then just put a quick little sell order out there.
Yeah, I know, and it sounds crazy to me.
And they all worked out, but it's just.
Yeah, I know they all
but,
worked out, but I'm just saying. Hopefully, but you're not doing that all the time. That was an exception, so that's fine. But I'm just glad you're not thinking, it worked out a few times, therefore this is smart. I mean, you can cross the highway with a blindfold on, and just because you don't get hit the first 5 times doesn't mean that's still smart. You know what I mean?
Right.
Yeah. So,
right.
But good. I thought you were doing this like all the time on your phone. So that was one of the things I wanted to address. But you're not. That was an exception due to work circumstances. So that's much different. Mm-hmm. So looking at the time here, we can start to wrap things up. But that was an interesting conversation, and that was an exciting rabbit hole to go down. I mean, going forward, do you have an amount of contracts you'd like to build up to? Like, hey, I'd like to be able to do this up to 5 contracts, or, I mean, I guess what are you just kind of focused on right now, trying to improve on within the strategy itself?
Basically, I've been playing with like different strike options, like with higher deltas, and something Dan like pointed out to me that I could possibly use like higher deltas instead of like, because I'm like in and out in a second. So like say if I have a 60 delta versus a 40 delta, like the profits could be like even that much more, I guess. But I mean, where I would like to see myself in the future is like getting like in the short term, getting up to starting off positions with 2 contracts, and then like in the next like probably like 4 to 6 months, I would say doing like a consistent of starting off with 3 contracts, and then I guess building up to like 9, I guess you could say.
Yeah, no, that makes sense. Is you got to prove it first with one,
itself.
And then from that point you can scale it upwards. So no, that does make perfect sense, and that makes a logical kind of sequence of how you would want to go. So I'm glad you didn't say, well, after I get 2, then I'd want to go up to like 4, because 2 to 4, that's a pretty big jump. So I'm glad it was 2 to then 3 at a time. And just keep in mind that, and I know you know this, so I'm saying this more for listeners, but he made the comment with experimenting with those deltas that can make profits that much more, but it also would speed up the other side of the coin, which would be losses. So just keep that in mind, listeners. Anything that can speed up and increase wins, the vice versa is also true in regards to the losses. So that's why, and that's why you have to be very careful and methodical in your approach in terms of scaling and just one step at a time. So I'm glad you don't have any crazy plans of, well, after I get this one contract figured out, then I'm going to go up to 3 or 4 at a time. That's a relief too. So we'll bring this to a close. Did you have anything else that you wanted to touch on or say or anything, Alpha?
No, just other than it's nice, I guess, really finding something that works for you, and then just as long as you keep at it, and then just have a passion for the markets. Like, I mean, honestly, I could say, like, I know people say it, but like if I can do it, like anybody can learn how to do it in a sense,
Yeah, I mean,
I thought I was going to be the last person to learn how to trade properly, but
well, the one thing I will, that an Alpha always stands out in my mind is he showed up in the Inner Circle chat room. Did you get some tough love or no? I can't remember.
Yeah, I might have had some tough love. I was a lost puppy dog, remember?
Yeah, no, I do remember, but I can't remember if you got the tough love or not. But point being is people, told Alpha about some things. Hey, you should consider this. And it's not like he was one of these people that, talk, but yet his actions never matched up with his words. His talk was quickly followed by his words, where he got Clay Trader University right away. But then the other thing was, this is during the point where we were going to be having our Pittsburgh meet and greet. And I mean, this brand new guy shows up. He's taking people's advice. He's not being offended. He's not like, oh, you offend, people are trying to help. But not only did he take everybody's, advice, and did he take everybody's constructive criticism, but then all of a sudden he shows up in Pittsburgh, like right out of the gates, where a lot of the people that show up, usually they've already known each other in the chat room and stuff like that. And, but here's Alpha all of a sudden showing up brand new. And that's what I think I always remember is, wow, the guy showed up, got Clay Trader University like right away after some constructive criticism. And then not only that, he showed up in Pittsburgh at that meet and greet. So that was, I guess my point here is he says, well, anybody can do it. Yeah, well, the thing is here, though, Alpha, is not everybody is as open-minded as you. A lot of people, as I know you've seen in the chat room, they're thin-skinned. They think that the world's out to get them. They think that anything that doesn't say something right along with their belief system or their viewpoint, that means that, they're out to give me. They play the victim card. This is what I'm trying to say. You do not play the victim card. You have a passion for the market, and it's fun to see, and it's fun to see things play out. And you got to have a passion, true. But if you have a passion and then in your other pocket is the victim card, that's always going to be a slippery slope to try to navigate. But you do not have that. So trying to think. Are you going to make it out to Denver?
One question real quick. Sorry. Possibly. I'm waiting for Hooch to sign up. Then I'll
He's
be
not
going
to go out to Denver. I can't even believe he went to Pittsburgh. He's not going to Denver. Give me a break. It could be in be in Toronto, and he wouldn't show up. He'd think of some excuse. I gotta I don't know. I gotta make some maple syrup. But I'm glad you called him out. We'll see if that works or not. But I would go short. I would go extremely short Hooch to Denver, but maybe he'll short squeeze me and prove me wrong, but that's my trade plan. But Mark, Alpha, whatever your name is, AlphaThor, I know what your name is, but whatever you like to go by, thank you for hanging out, and we'll have to have you back. Whether it's a whole year, I don't know, but I definitely will want to have you back and see how the strategy continues to unfold. But yeah, keep that win rate high, and keep chugging, man. So thank you for hanging out.
Cool. Thanks a lot, Clay.
For you listeners out there, before we go, final few things. If you are listening at the website, claytrader.com, make sure to click that share button. Down below the video, there is a comment section, so feel free to leave comments. I do read those, and I will reply. If you're listening on YouTube, then like this video. That would be great, but also make sure to check out the channel. There are other videos besides these podcasts, live trade videos, quick tip videos. We have a vlog, so check out the channel as a whole. Hopefully you ultimately decide to subscribe. And then finally, if you are listening on iTunes or any of the other podcast players, subscribe. And on iTunes, if you could take the time to leave us a rating, that helps us out quite a bit and goes a long way. And, we'd really appreciate it. So thank you again to all of you as listeners. Thank you to Mark for hanging out. We'll see you all back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.